We're analyzing eBay, stock ticker EBAY, to see if its market price is a fair value. We're using the Select 6 analysis to look at the most telling financial metrics before estimating an intrinsic value for eBay. Then we're giving a final rating to the business. There will be a key bonus metric along the way that just might be the tipping point when analyzing eBay for your portfolio. Before we get into these valuable metrics, let's understand eBay stock performance. Right now, eBay trades for $43.11 per share. In the last year, their stock price is down 21%. In the last 5 years, eBay's stock price is compounding at just under 2% annually. In the last 10 years, eBay's stock price is down 20.5%. Part of this is due to the spin-off of PayPal, which was wholly owned by eBay. Going back prior to the global financial crisis, in the last 18 years, eBay stock price is only up 7% overall. Currently, eBay pays an above average 2.1% dividend yield. Their average dividend yield throughout this time is in addition to these compounded annual returns. eBay trades $6 above their 52-week low. The company is down more than $10 from their 52-week high. 2.5% of their shares are sold short. eBay is a large business. They have a $23 billion market cap. But why should we be paying close attention to eBay? eBay operates one of the largest e-commerce marketplaces in the world with $74 billion in 2022 gross merchandise volume, rendering the firm a top 10 global e-commerce company. eBay generates revenue from listing fees, advertising, revenue sharing arrangements with service providers, and managed payments, with its platform connecting more than 132 million buyers and roughly 20 million sellers across almost 190 global markets as of the end of 2022. eBay generates just north of 50% of its gross merchandise volume in international markets, with a large presence in the United Kingdom, Germany, and Australia. Starting with metric number 1, we want their average return on capital in the last 5 years to be above 14%. The average publicly listed business earns about a 7% return on capital. By looking for a benchmark that's double this, we can potentially build in some margin of safety for ourselves based off the overall quality of eBay's business. eBay's return on capital has increased over this time. In their most recent fiscal year, they earned about 14.5% returns on capital. Averaged out, eBay is coming in at 13.96% average returns on capital in a given year. That's almost as close as it gets to hitting that 14% benchmark. Even though we're oh so close, this is still technically below that. So metric number 2, we're looking at their growth. We want to see growth in their revenues, net incomes, and free cash flows in the last 5 years. This metric is all or nothing. All 3 of these have to be up for this to be a check. In the last 5 years, eBay has grown their revenues by 13%. Their earnings, however, are down during this time. Their earnings were actually negative in their fiscal 2022. The company took a $3.8 billion loss on investment. Their income statement gives us more perspective here. They had nearly $6 billion of losses on the sale of investments in the last 2 years. In 2021, eBay had more than $13 billion in earnings from discontinued operations. These additional earnings and these charges are going to be crucial to understanding eBay. Again, however, their earnings are negative currently. And in the last 5 years, eBay's free cash flows are down 11% overall. With only their revenues growing during this time, this is an X on metric number 2. Metric number 3, we're taking the perspective of an individual shareholder in eBay by looking for earnings per share growth over the last 5 years. eBay's earnings have gone from being positive to negative over this time. The big thing to note, and one thing that really sets eBay apart, is eBay has bought back 44% of their shares outstanding in the last 5 years alone. eBay is a share buyback machine. To use Monish Pabrai's term, they qualify as one of the top Uber cannibals during this time. This is important for long-term shareholders because when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that business. When eBay buys back their shares, they're increasing your ownership without you having to pay a dime. There are factors to consider with these buybacks, including the price that they occurred at and what a reasonable estimate for eBay's intrinsic value is, which we'll come to at the end of the video, so stay tuned for that. Again, because their earnings are now negative, this is an X on metric number 3, however. Metric number 4, we're looking for free cash flow per share growth in the last 5 years for eBay. Here we get to see the power of their share buybacks. Even though their free cash flows are down in the last 5 years, eBay's buybacks are outpacing this, meaning their free cash flows per share are actually up. This is our first check of the day coming in on metric number 4 for eBay. During economic downturns, it's overly levered businesses that are likely at the greatest risk of poor outcomes. In metric number 5, we want their net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of free cash flow eBay has produced in their last 5 years. eBay currently has just under $2 billion worth of net debt, and during this time frame, eBay has produced more than $10.6 billion of free cash flow. That's more than enough to be able to comfortably support their debt position. eBay produced nearly $1.8 billion in free cash flow in their most recent fiscal year, so they could pay off all of their net debt with just over 1 year's worth of free cash flow. This is another strong check on metric number 5 for eBay. So far, through our first 5 metrics, we have 2 checks and 3 X's for the business. Before we get to metric number 6, let's not forget about our bonus. As our bonus, we're evaluating eBay's dividend profile. eBay started paying dividends in their fiscal 2019. They've steadily increased this in the past 4 fiscal years. eBay has well supported their dividend payouts with their free cash flows during this time. They've maintained a modest dividend payout ratio. Even though their free cash flows are down, their free cash flows per share are up because of their buybacks. And both their dividends and their free cash flows per share have increased in the last 5 years. While this is a snapshot of their past performance, and it's no guarantee for the future, eBay's dividends seems to be in healthy shape. The big metric of them all, metric number 6, we want their average free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this will provide us with a slight risk premium to the yield of the 10-year treasury, and it may offer a starting point for an estimate of eBay's fair intrinsic value. eBay currently has a $25 billion total enterprise value. This takes into account both their market cap and their net debt position. It gives a perspective of eBay that's more similar to as if they were a private company. We learned in the last 5 years, eBay has produced $10.6 billion worth of free cash flow, meaning in an average year, eBay produces about $2.1 billion in free cash flow. When we divide that by their $25 billion total enterprise value, that gives us an 8.4% average free cash flow to enterprise value yield for eBay. In their most recent fiscal year, eBay produced $1.8 billion of free cash flow. When we divide that by their $25 billion total enterprise value, that gives us a 7.2% current free cash flow to enterprise value yield for eBay. On both a current and an average basis, this is coming in more than double the yield of the 10-year treasury, and this is above that risk premium we'd be seeking. This is a strong check on metric number 6. Just because this is the case doesn't mean you run out and go buy the business. This is not a buy or sell recommendation of any security. It's not financial advice. You'll want to stick around as we calculate a more concrete estimate of eBay's fair intrinsic value before giving a final rating to the business. Everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze eBay, which takes us on to using a discounted cash flow model to come to a potential fair intrinsic value for eBay. A DCF model is based off the predictability of a company's free cash flows. It's like any model in any discipline, its outputs are sensitive to its inputs. We're starting with a 3-year average of eBay's free cash flows, then using historical assumptions to grow these into the future. It's up to you to do your own homework here. If we assume eBay grows their average free cash flows at a rate of 5% annually for the next 10 years. Then in the 10 years from there, these free cash flows grow at 4% annually, adding in the company's tangible book value, which gives us an estimate of their tangible net worth. If we were seeking a 15% rate of return, which is the rate of return Warren Buffett is looking for from his investments, in addition to his margin of safety requirements, it looks like based off today's valuations of eBay, a potential fair intrinsic value for eBay is around $28.50 per share. That's coming in $15 below their current stock price. There are some factors to be mindful of here. eBay has had a low degree of business predictability in its past. This potentially affects our assumptions, and it makes it harder to evaluate eBay into their future. eBay's dividend yield would also be included in this 15% discount rate. Most importantly, this analysis is not financial advice. It's not a buy or sell recommendation of any security. Before considering any potential investment decision, please consult with your financial advisor. In just a minute, we'll give our rating to eBay, but we have to address something first. What are the qualitative aspects of the business? Starting with the key points supporting a potential long thesis of eBay. Number 1, the firm's ability to quickly deploy platform improvements across geographies suggests a more flexible innovation roadmap and should underpin stronger international growth prospects as the focused categories rollout moves toward international markets. Number 2, recent successes in high-touch, luxury resale, and collectible categories offer a blueprint for prolonged growth in subsequent focused marketplace categories. Number 3, the firm's managed payment rollout was executed well and offers optionality for financial services down the road. Then the key points supporting a potential short thesis. Number 1, with more than half of product search originating on Amazon or search engines in the United States, customer acquisition and search advertising may grow increasingly difficult over time for the marketplace marketplace operator. Number 2, prolonged competitive pressure and a weak macroeconomic backdrop could pinch near-term gross merchandise volume growth and drive modest operating deleverage. Number 3, the firm's lack of proprietary logistics operations and first-party inventory could see eBay continue to lose market share in the e-commerce category more broadly. There's a balanced perspective of some of the qualitative aspects of eBay. Now it's time to give our rating to the business. In analyzing eBay, stock ticker EBAY, we learned the business earns average returns on capital that were oh so close to our benchmark. eBay has grown their revenues in the last 5 years, but their earnings and their free cash flows are down, outpacing nearly every business in the market. In the last 5 years, eBay has bought back 44% of their shares, making them one of the biggest Uber cannibals out there. Even with declining free cash flows, eBay comfortably supports their net debt position. On a current and an average basis of their free cash flow to their enterprise value yield, those looked attractive relative to the yield of the 10-year treasury, coming in a few percentage points above the risk premium we were looking for. eBay also started paying dividends in the last 5 years. Coupling that with their share buybacks, they've been returning a lot of capital to shareholders, and those have strongly been supported by their free cash flows in all of these years as well. It's worth reiterating, this analysis is not financial advice. It's not a buy or sell recommendation of any security. Before considering any potential investment decision, please consult with your investment or financial advisor. With all the factors of our analysis combined, eBay looks like a strong candidate for further research. Given the business's high capital returns, performing our discounted cash flow analysis, if you were seeking a 15% rate of return at today's valuations of eBay, an estimate of eBay's fair intrinsic value is around $28.50 per share. eBay was last at those levels in spring of 2020. You'd want to be patient as you research the business in more depth. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, comment down below what business you want me to take a look at next time. Thanks for learning about eBay with me. Have a great day.